Hello and welcome to my trade review of October 23rd, Monday. So today was one of those days for me. I took three trades, and with those three trades, there were three losses, and I called it a day. The losses weren't major, they were just avoidable, right? Uh, there were a lot of very like basic mechanical, structural, technical errors that I was making that I shouldn't be making, and that's kind of where a lot of the frustration today comes from, and that's what I want to go over in particular today is how to have ways in my system and in my trading where I can really avoid those, basic beginnerish kinds of errors. So, yeah, let's get started just by going over this first trade here. And this was one where, we have these tapering algos here. There's the yellow buying channel, and then we begin tapering to the orange that's here, and then the magenta, the blue here, right, that holds here, holds. And there's some strong validity to these algos. They are really holding price nicely. And this is obviously the strongest one. The yellow is the strongest algo, and we're holding it for quite some time, and there's literally no tapering of any sort, right? It's just very aggressive buying. If you look on the 5 minute, it's just like all consecutive bull bars. And then there's this break right here, right, of the yellow tapering. However, that it's not. It's just like a break of the strongest algo. There's not enough confirmations to go short, and of course, it's picked up by you see the orange algo holding us, holding us, holding us, and then it holds us there. And we never even came back to test that orange algo. We were still in this controlled selling. You see this white structure here, right? The same white algos. This is the controlled selling we were seeing. That's taking us up, building liquidity within these larger channels. And I decided to short after we even break to the freaking upside of that white channel. And I short right here, forcing whatever, this head, shoulder, head, whatever, right? And it was just because of this volume. Like, this volume basically made me like, okay, well, now that there's that, then, but we have to go down. And that's just ridiculous, right? I mean, look at the strength of the bull move. You think this little bit of volume is going to stop all of this? Like, look how much more that is. But, I have the bias. I'm looking for confirmation bias. I'm even drawing this yellow algo here, saying this is controlled buying, and the break is going to send us flying down and grab all this liquidity here. No, I mean, that's not trading with structure. That's trading with confirmation bias, trading with projecting your will onto the market rather than actually thinking in probabilities and, who's in control here. Well, it's very clear that the bulls are in control until we at least, break down to this level. We break out of this blue algo here. We break out of the orange algo here, and we start building some bearish structures and breaking below some key levels and some key algos. So it's like, the question and the main theme today is how do I avoid these sorts of trades? And I'll answer that once I go through the other ones, because you'll see that the mistakes are very similar. This was another one where same algos here, right? And that same white controlled buying, and we have this strong breakout here holding the support, right, this yellow level support. And if I wanted to, I mean, I could buy either on this green candle as it's breaking up here, holding that support at the bottom of the range, or I could buy once we break out of the controlled algo, and then we retest right here, and then we continue upward. And this was one of those trades where I stopped out to the tick, and it flew upward, and it went up quite a lot after I got stopped. I mean, it broke high of day. It went pretty far. And the thing for me is, look, I definitely managed this trade badly. I was kind of just like, just stop me out, whatever, because this was so choppy, right? And I didn't respect my original stop. I tightened it because I didn't want to take a massive loss on this, and that's not good trading technique, right? If I would have kept my original stop, I wouldn't have gone and stopped out, and the trade went like 10 points in my direction. Like SPY rallied like 80 cents, like almost a full dollar in like 7-8 minutes after, no, like 5-6 minutes after I left. And that's the sort of thing where, look, this wasn't a, yes, it's a mechanical issue that I moved my stop here. Yes, it's a execution error, but ultimately those errors are there because I was emotional. Because I entered the trade and this was kind of chasing, this is, like, to me, this is not a good entry according to how I want to analyze the market. And I want to stick with that because I know that it can work. I know that it works. And I don't think this is a good entry. When we break out like this and then I'm buying literally up here at the top of the range, like that's not a good fill. Either I buy when this bar turns green here, protecting this bottom range, then I can have my stop here at the head. But when you're buying up here, your head and shoulder is already completed, right? If this is the neckline of the IHS, and I'm buying right here, right where the green circle is, it's like, well, the move is already there. Oh, well, I deleted it. But anyways, the move is already there, and that's just not good trading, right? That's not proper structure. That's just chasing. So how I should have traded it was when the market, I can go up top to, yeah, it was here, right? So when the market came here and I entered right here, this was my entry, right? And rather than enter right here, once the structure completed, right? High of day resistance, high of day resistance, high of day resistance. You either enter when this bar turns green, anticipating the head, or you can wait for this break, either here or here, and then it retests, right? That controlled white algo. Don't just take the break, take the retest, because then this forms that stronger right shoulder, right? And rather than just taking the break, you can either wait for this retest, right? Here, when it goes and then it gets engulfed, becomes a hammer doji, and then stop below here, firmly below here, and you protect, and that's a good place, that where it doesn't look like the market would go below that. Or you wait and then retest right here, and it starts forming that shoulder again, right? That liquidity building. So you need to get a better fill. You need to be buying on those pullbacks, or early on. You can't just catch, like when you're buying right here, you're catching like the freaking end of this initial move, and then you're getting stopped out on the pullback because you're not respecting your initial stop, which should have been here or here, and you're just like, oh, for me, it was like, right, those should be your stops. For me, I stopped purely emotions. It was purely like, I just let me move my stop to like a very small loss and leave me alone. Like, I don't want to, man. I was just kind of like, because I didn't like my entry. My entry was not part of my system, and I was upset that I entered there. And I was like, okay, I'm just going to get out. And that's, I mean, I think there's good and bad to that, but I also think that I need to find a way to actually recognize what is a good entry. What does my system tell me when to trade and when not to trade, And that's what I'm going to cover very soon. Once I finish reviewing the final trade here, which, again, ties into that same story of yeah, there we go. Look, I see this tapered buying channel, but we start coming down in such a way that it's like there's no pullbacks and you're just chasing the channel, right? And that's exactly what I did here. There was this move, and I saw we retested the channel, but I said to myself, dude, like this is what I wanted to see. I wanted to see us come here, and I wanted to see a form a microstructure, right? And then something like this, and then we break down. And that's actually what we got, because this zone, this is a chop zone. Like, there's no point in to be, for me, I don't want to be in here. And then we break to the upside and immediately flush down. And then you're right back in that chop zone. Like, you don't want to be playing around here without some clarity, without some structure. Where is the significant, like, microstructure, high or low forming, right? Where we have this move, and then we have the, right, like this. That's what you want to see. And that's ultimately what we got. But when you're entering here, I remember I came to the market and I looked at this and I said, well, I missed this. I didn't want to be a part of it, and I missed this short, and I was like, this just isn't good. This is not worth trading. I don't care whose side is going to win. And also look at this volume right here on this candle that's defending this range. And I just said, like, I don't want to deal with this. But when that candle spikes down, you see those wicks, those bottom wicks. When those bottom wicks spike down, that's when that impulse, when that that fight or flight, caveman brain, that thrill of the trade, that rush, that dopamine hit. And you saw that red spike, and I, boom, short. And that's not, that should be the last reason to enter a trade. So, look, short stop needed to wait for more significant lower high, forming right shoulder. Yeah, exactly, right? Right there. Right, lower high. This would be your lower high, not a higher low, sorry, your lower high. Rather than just chasing it down the channel, which brought us back to the major chop zone. And so what I want to talk about now is kind of what I've been hyping this whole video up for, which is what is my plan and what is my system. And very simply, I need to find very specific mechanical, objective rules, regulations, metrics that are easily identifiable on the chart, and say, all right, if that's the case, then no trade, right? In the same, right, exactly the same. And I've been talking about this, and today, sorry, this is in retrospect, this trade review. However, today, which is the 24th, I believe I had some success with this. I laid down some very clear rules and intentions and purpose regarding, look, if we're in this channel and there's no break of the tapered channel, then there's no shorts or there's no longs. Or if there's no liquidity on that area, then there's simply no trade without a microstructure. And if the microstructure looks too forced or too janky or just all over the place, then there's no trade, right? So for today, it was like, if I'm not looking at the charts for at least 5 minutes, then there's no trade. And this is sort of what I'm trying to build, which is, what are my specific indications of price, of the algos, of structure, of liquidity, that I say, okay, I like this, right? And I'm going to go over this, and I go over these things every single day when I talk about the best setups. These are when there's very clear indications of, all right, the market is doing something I like, right? Whether it be volume or the price on the higher time frames or the levels or a zone or a tapered algo. So, yeah, that's sort of where I'm at with that, because I feel like this day, October 23rd, I really didn't allow myself to, and force myself with intention to follow those metrics. I was just trading and entering trades, not being super sure of why I wanted to enter the trade, but what convinced me to enter the trade was the candle moving fast in my in the direction I wanted. So I'd come to the market and I would look and I'd say, oh, well, this is a little unclear, but I could see this or this potentially playing out, and then the market just has that little spike, that little impulse, quick move, and I jump in. And that's not how I need to be trading. I need to be very focused and patient and analytical and piece the puzzle together, like a hunter, right? Like a predator, an apex, animal predator that sits in patience, in wait, in silence, with a plan, with a strategy, right? With a backup plan, with a plan B, right? Of how they're going to deal with this if this or this and this happens. And that's what I need to be doing. It's not, oh, it does this, okay, let me go for it. No, there's a very specific set of requirements, of rules that need to play out. So look, if it's in this controlled selling channel, right, and it still hasn't broken out of that tapered blue channel, then what are you doing taking shorts? What am I doing taking shorts? There's no reason to be shorting there. And if it's in this red, very aggressive buying channel, what am I doing taking a short there? Or if we just had like this, another day, some massive drop, and it's very aggressively in that channel, no longs. And that's very simple, that's very obvious, but you can create those rules with other metrics in your trading. It just doesn't have to be longs or shorts. It can be, well, I'm only going to be drawing these algos or looking for trades in these zones at these levels or at these kind of times of day because I know that's when the market is likely to move more favorably for my style, right? Or I'm going to take these breaks. So I've already implemented rules in my discipline, right? Where I only trade these times. I only take this many trades. I stop after this many trades. I take this long of a break between trades. But I need to work on those rules regarding when I enter and exit. And not just when I enter and exit, but what sort of pieces of analysis am I looking for. It's like when Eric says, I will not go long until this liquidity at red 48 is red 448 is grabbed with this channel break on the right shoulder, which forms either a breakout of the channel, or if not, then a microstructure here, right? Like he's very particular, like a chess player, of this needs to happen with this and this. And if not, if else, then have a nice day. So that's the rant. I feel like I want to give myself and those who are listening more concrete examples. And that's something I'm working on, of what exact metrics and rules and ideas am I looking for. And that's something I will have in the coming days as I'm able to clarify things with myself a bit more and what I like and what I dislike. So anyways, let's go over these setups. This was an interesting one because we have volume. We have this very clear channeling down, but there's no structure here. So the market immediately just starts trending. And the volume is not that great. The market immediately starts trending down, 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 right? And we break out of the channel on a much higher volume than any of those other candles. We break out strongly out of the channel, and then we put in this pin bar, right, on low volume. That's that 3-bar play, right? You have strong breakout, the retest candle, very low volume, immediately gets shot up, and you can enter right on this bar with a break of VWAP, lining up, right shoulder, right? I mean, I think that's just right at the beginning of the day when you know there's swings. You know there's swings in either direction. And this was like Eric said, where the selling just goes down in a channel, and there was no liquidity or structure being built, so it can be reversed just as easily, right? Easy up, easy down. Easy way up, easy way down. Especially with that volume confirming it. And this was, I mean, you take this trade and you're done for the day. You walk away. It's $1.12 in 2 minutes with no hesitation or stops whatsoever. And this is profit taking, of course. And then we get our second leg here. And this is when the algos start to kind of show themselves. So you have this breakdown. I mean, you have this strong boom. This is just like consecutive strong bull bars in a higher time frame, right? And then you have this low volume. I mean, look, it's consistently lower on decreasing volume. So you have these two bear bars, lower volume, another one, right? Lower volume, and then we get a bar right here, which, interestingly enough, finds support right with this level, right? So this is creating a hammer doji and engulfing, and then it reverses up. So that's one trade. The next one is when we come here and we begin to break back into these channels and we form this right shoulder liquidity here, and we grab this and then we form this, and then we have these two hammer dojis, right? Hammer doji, and then you enter on the breakout with the controlled selling. And then you just, look, this red channel, you just take it from here, connect it at those hammer dojis, just let it guide you all the way up. This is from 421.25 and then it finally breaks at 422.65. That's a monster trade. And then you have the same controlled selling, and like I said, you can either enter here, same support level, just like here, support, support, and right when this bull bar comes in and it turns green, because you see that volume shooting in, right? Or if you want a more conservative entry, on the controlled selling with the inverse head and shoulder, right, just like before, ideally you should be waiting for the retest. See how that bear bar retests, right? Right there. So that's what you want to see. And then you have this, right, controlled selling, left shoulder, head, right shoulder. And that's a beautiful entry. Spiking up, high of day, climactic, exhaustive, calling it a day. You come down and then you break the channel, but it's right. This is where people like me got faked out, where you just chase it down without waiting for a significant lower high, for a significant microstructure to form. And that's what we do right there. Right on the break of that same channel. Gorgeous. Right? Head, microstructure, head, left shoulder, right shoulder, head. Left shoulder, and you take that down. And look, probably a lot of us, naturally would get stopped at break even here, but it did lead to a decent move. So that concludes this video. I think the next few ones, one or two videos, I'm going to have better ideas of what exactly is my system. Not just, I look for algos and structure and liquidity, but I look for algos under these conditions, doing these sorts of things at these sorts of times. And if that's the case, then I'll use these sorts of structures with these sorts of confirmations of the price action, the volume, and this kind of liquidity. That's how you need to be. You need to be mechanical. You need to have a system. You need to be intentful. You need to have purpose. So, thank you.